Hey guys, welcome back. Today we're going to take a look at what is arguably the most popular dividend ETF in America today. Not the largest, but I would imagine has a pretty large following, even though its assets under management comes in third place of all dividend ETFs. Which one are we talking about? We are talking about SCHD, and that's the Schwab US Dividend Equity ETF. We're just going to do an overview, see what makes this thing tick, and see if it's right for you. So let's dig in. So what SCHD does is it follows the Dow Jones US Dividend 100 Index. The index universe is defined as the constituents of the Dow Jones US Broad Market Index, which excludes REITs. So the stocks must pass the following screens. Minimum of 10 consecutive years of dividend payments, so no pauses in the dividend payments. Minimum float adjusted market cap of at least 500 million, so no micro cap companies in here. And the minimum 3-month average daily volume traded of US $2 million. So stocks passing all three of those screens are ranked in descending order by yield, annual dividend yield, and it's divided by its price. So the top half of those, based on that ranking, are eligible for stock selection. So it's really a strong dividend-focused quality screen that SCHD uses. So let's take a look at what it breaks down to. We're looking at the Schwab US Dividend Equity ETF, currently as of today trading at $80.81. It has 29.84 billion net assets, but that's as of November 30th. Distribution yield of right around 3%, which isn't too bad. And cheap to own at a net expense ratio of 0.06%. Fact set, this is a new thing that I'm adding into these videos. Gives it an A rating. Morningstar gives it a 5-star. So what does the price to earnings look like? SCHD, definitely value weighted. Price to earnings trailing 12 months of 16.4. So let's take a look at the portfolio composition. Now, as we said, it's the Dow Jones US Dividend 100. Let's zoom in on this a little bit. And so it has 105 total stocks. The top 10 comprises of 41% of the total fund. And those top 10 are Home Depot at 4.8%, Pfizer at 4.6%, Broadcom at 4.5%, Pepsi at 4%, Texas Instruments at 4%, Merck at 4%, BlackRock at 3.9%, Cisco Systems at 3.7%, Coca-Cola at 3.7%, and Verizon Communications at 3.7% as well. 99.4% in North America and only 0.6% in Europe. So the market cap, I lied. Look at that. It's got 0.89% of micro cap exposure, 74% in large cap, 22% in mid cap, and 3% in small cap. And Morningstar rates this as a large value blend. Sector exposure. Right now, we've got financials, that's its top exposure at 22%. Information technology at 21%. Consumer staples at 13.5%. Industrials at right around 13.5%. Healthcare at 12.5%. Consumer discretionary 7.4%, communication services 4.6%, materials 3.3%, and energy 1.8%. Now, this one does exclude REITs like we talked about earlier, so if real estate is a requirement for your portfolio, you might want to consider using an ETF or investing in some individual REITs. So let's take a look at that dividend. And we're going to go over here to Seeking Alpha for that. Seeking Alpha shows it as a 2.78% dividend yield. Everywhere you go, it's going to be just slightly off, but it's right around 2.75% to 3% for the yield. Trailing 12-month dividend growth rate. So this is how much your dividend has grown over 1 year. That's 10.88%. 3 years compounded growth rate, 16%. And a 5-year growth rate of 12%. Now that's outstanding. That's the real strong point of the dividend quality screen that SCHD employs. And this is one way to ensure that your income is keeping up with inflation for sure. It doesn't have a 10-year CAGR. Probably next year it will have it, because you see here consecutive years of dividend growth, 9 consecutive years, and 9 consecutive years of payments. So really strong dividend quality screen with SCHD, and definitely one of the top ones in the growth category. So kudos to Schwab there. So let's take a look at its return, and I'm going to use etfchannel.com for this. And SCHD, a lot of people like to compare to VYM. So every time I get one of these, do one of these overviews, if I think one ETF is kind of similar, or people that like to compare them, I'll compare them to those. And this one is very similar, or compared a lot to SCHD. So let's take a look and see how that did. Let's let that populate. And we'll see SCHD and VYM really, if you look at the chart, really tracked very well up until March of 2020 with the little crash we had there, or correction, I should say. But after that, the recovery from SCHD has been completely strong, and it just has run away. Total average annual total return for SCHD since 2011, not quite 10 years, is 15.27%, and for VYM is 13.15. So SCHD, a little bit more concentrated portfolio than VYM. If you missed my VYM video, I'll link it up top and down below. That was just 2 days ago. Check that one out and you'll see how that one runs. But SCHD, you know, smaller compact portfolio of only 100 holdings, but high quality screening to be included in that index. So kudos to SCHD and all those who own it. I think it's a great holding. Anyway, that's it. That's for the overview. Hope you guys enjoyed. Leave me a comment down below. Like, share, subscribe, do all that good stuff. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.